Hi, my name is Mike Barrios with Integrity Home Finance. I'm also a founding faculty member of the National Institute of Financial Education. Today, the topic of discussion will be the first-time homebuyer tax credit. Here's how it works. It's pretty much a gift certificate from Uncle Sam. Now, let's say, for example, your tax person tells you that you need to write a check for $2,000 because you've underpaid the IRS. That means they would subtract the 2,000 from the 8,000 and you'll still be getting a check for 6,000. Now, if you've overpaid the government, that means you get a tax refund. If, for example, you owed a $2,000 refund, you'll have 2,000 plus 8,000 equaling 10,000. Even if you purchase a home in 2009, you can still claim that on your 2008 tax returns. All you have to do is file an amended tax return and they'll send you a check for the $8,000. Some of the general rules are you could not have owned a primary home for the past 3 years. You could have owned a home over 3 years ago. You could have owned a second home or an investment property or a vacation home, but you cannot have owned a primary home for the past 3 years. The maximum credit will be 10% of the purchase price with a maximum of $8,000. So for example, if you purchase a home for $60,000, the maximum you'll be getting is $6,000. Anything over $80,000 is only $8,000. $8,000 max. The great thing about this rule is that you do not have to pay back as long as you live in the home for at least 3 years. If you move or if you sell the home within 3 years, you do have to pay it back. And there is a deadline. You must purchase the home before December 1st, 2009. Now what they're saying is that you must own the home prior to this date. Not starting to look for a home, not writing offers, not thinking about it, but actually closed on a home before December 1st, 2009. No one knows right now is if they're going to extend this rule or extend this credit or add anything, but for this tax credit, $8,000 credit, you must purchase a home by December 1st of 2009. Now let's talk about income limitations. If you're single or married, if you're single and you make $75,000 or under, you qualify for getting the credit. If you make between $75,000 to $95,000, you will receive a portion of it. If you make over $95,000, you do not qualify. Now for a married couple, if you make $150,000, then you do qualify. If you make between $150,000 and $170,000, you will receive a portion of the credit. And if you make over $170,000, you do not qualify. Another rule is that you cannot purchase from your parents, children, or grandchildren, or grandparents. You can purchase from your siblings or your cousins, but you cannot purchase from parents, children, or grandchildren. If married, both spouses must qualify. If it's a new marriage and one of the spouses were in a previous relationship and they owned a home, you don't qualify. If unmarried and you purchase a home together, the $8,000 will be split equally, or depending on how much the ownership is of each party. Each person does not get $8,000 equaling $16,000. The couple for one home will get $8,000. Now the next step is contact your mortgage planner at Integrity Home Finance. At Integrity, we're committed, qualified, equipped to serve you, your friends, and family. If you need any financing or have any general questions about purchasing a home, please call us at 1-866-653-FUND or visit our website at iwanttoborrowsmart.com. Thank you very much.